Welcome and a very good day to all viewers out there. Today we are going to discuss question 4 from Mfrs 141 Agriculture. This is for the subject FAR320 and we are going to discuss the question together with the suggested answer. So the first question, question 2A1, you are asked to explain the term agricultural produce and agriculture activity. So that is just for 1 marks and 2 marks respectively. So agricultural produce, as you are aware, this is from the lecture, harvested produce of the entity's biological asset. So you just need to just give the definition without any example because it's just for 1 mark. Harvested produce, let's say we are talking about strawberries coming from the strawberry trees. Agricultural activity. So agricultural activity is the management. So it is a managed activities of the entity of biological transformation. So biological transformation, looking at the physical changes of the asset, biological asset, and harvest of biological asset for sale, which is the future benefits of that agricultural activity, or maybe to convert them into agricultural produce, or to convert them into additional biological asset. So this is more on procreation, this is more on production of your so-called agricultural produce, but this is more on procreation, which is looking at the definition of biological transformation as well. Next, this is question part 2B. It's about ternak maju, where ternak maju involved in the business of sheep farming. So sheep farming is an agricultural activity, and the company owns sheep at different age group attribute. So this is the different physical characteristic. So these are the age group that you have as at the beginning of the current period. So 1st of January is actually the beginning of the current period, 1st of January. And this is what you have in your accounts or the biological asset account as at that date. But the balance here is in quantity. You may have to convert them into units. So there are different age group here. 1-year-old, 2-year-old, and 3-year-old. Okay, those are the different physical characteristics of the which is related to the age attribute. On 1st of April 2016, so this is the beginning of the year, but somewhere 1st of April 2016, you imported another different age group, which is you imported 3-month-old lamb, and you imported the quantity is 70 and the cost was 28,000. So that one is the total price for the 70 3-month-old lamb. So if you were to know what are the price per 3-month-old lamb, it would be 28,000 divided by 70. So the price here would be how much? Would be RM 400. On top of that, the That was on 1st of April. On top of that, throughout the year 2016, so if it's year 2016, it starts on 1st of January. So the reporting date would be 31st of December 16. So this is the end of the year or the reporting date. And these are the costs or the subsequent expenditure that you incur to your agricultural business, which is the sheep farming. Let's look at the requirement. Before that, you have this information that relates to the fair value less cost to sell per animal. So we have the information relating to the price of a 1-year-old sheep, 2-year-old sheep, 1-year-old, 2-year-old, and 3-year-old. This is the one that you have from your balance, and this is the price as at 1st of January, which is at the beginning of the year. Bear in mind you purchased one item on 1st of April 2016, and that was the 3-month-old lamb, and the fair value per unit I have already calculated earlier was 400. So these are the price on the date of purchase. These are the price at the beginning of the year, and the price here that you have is the price as at the end of the year or the reporting date, end of the year. And if you see these are the information given to you, which is fair value less cost to sell. 3-month-year-old sheep after a year, the price as at 31st of December, you have a different price here. For the 1-year-old sheep, different price. This one is 3 months. This one is 1-year-old, 2-year-old, 3-year-old, and 4-year-old. So these are to show some different price. For example, the price of the 3-month-old here was on 1st of April was 400. But if you look at the end of the year, if you have 3-month-old sheep, a 3-month-old sheep at the end of the year, the price now has gone up to 890. So there is that change in fair value, and that one is due to the price change. So we are going to look at that. So let's look at the requirement. Bear with me. I'm looking for. Okay. You are required to prepare the journal entries to record the acquisition on 1st of April. So on 1st of April, there was acquisition of biological asset. Remember we are talking about the 73-month-old cow. It's not cow, lamb. So here, what you will do is that will involve some increase in asset, biological asset. You record that and you will credit them to bank or to payable. And you need to see the price has been given to you to be 28,000. That has been given. And actually this 28,000 as a result of 70 times 400 if you are not given the price directly. So you are done with the first journal entry, you get 2 marks for that. Number 2, determine the amount of fair value changes. So we are trying to determine whether there is a gain on fair value change or there is a loss. And we need to determine the price change as well as the fair value change due to physical change. So we need to go and find each of the changes due to the price change as well as the changes due to physical change, and then we need to total up to find the net effect of the overall fair value changes to see whether there's a gain or a loss. That was number 2. Number 3, you asked to determine the carrying value of the ship. Ship is a biological asset. So you are asked to determine what are the carrying value of the ship in the biological asset account as at 31st of December. So it should be shown at the fair value less cost to sell, which is also as at 31st of December. Next, you are asked to prepare the extract of sopel of ternak maju. So you need to show the income or the revenue of ternak maju. So you need to look at what are the total income. Income which is partly due to the revenue from your agricultural activity, which is in the sopel. Let's look at the next. So just to recall, this is the journal entry that I have done. And I also later I will show you this, how do we arrive at the biological asset account, but we will go and do this later. So you need to calculate gain on fair value due to price change first. So you need to compare the lamb, the sheep at the same age at 2 different dates to get the gain on fair value due to price change. We are going to do this. And we are going to do that by comparing 2 different dates by first looking at what happened on beginning of the year and then compare with what happened at the end of the year, right? And then the second one, we are going to do this for beginning of the year versus the end of the year, and also for the one that we purchase. So we'll be doing this, but the age is still the same, only that the price changes because we are looking at price at 2 different dates. The end of the year versus the most recent date for the same age group, which is the same physical characteristic. Next, we are also going to do this gain on fair value due to physical change. Physical change means we are going to compare price on the same date. Same date here is on the last date of the year, which is 31st of December 2016. Same date, end of the accounting period or the reporting date. But we are going to compare the different characteristic. The different characteristic here is the different physical characteristic. And our case here is the different age. Why? Because from 3 months, they will grow into a more the older age. So 2 years old, for example, will now grown up to become 3 years old if it's in 1 year time, right? If it's in 9 months time, the 3 months old will grow to become 1 year old. So we'll have to do this, and that is looking at gain on fair value change. And we're going to make use of this table given to do that, all this table given to do that. And what we will do now is we are going to first calculate the requirement, which is the gain on fair value due to physical change. So we're going to compute gain on fair value due to physical change, meaning to say that we are going to look at different age, right? Different age, but with the same price. But before that, I am reproducing the table here again. So when we say physical change, for example, for our, we are talking about we have a few categories, which is the first one is this 1 year old. So the change after a year, because we are given this 1 year old sheep as at 1st of January. So at the end of the year, that 1 year old will grow to become 2 year old, right? Because after a year. So you need to compare the price, which is at the different price here, which is 31st of December versus 1st of January. That is one example, because now it has grown up to become 2 years old. So let's look at what I've prepared for you, and I will explain that here. So when we talk about physical change, the date will be the same. The date will be the same. So therefore, we are just going to focus on this date. We are just going to focus on that date. Yeah. I will erase this part. Okay. Right. So same date but different age group. Different age group. So these are the date. 31st of December. The date will not change. It will be at the end of the reporting date. But the age is what will change. So when I say the age, we are referring to the age at the end of the year here. So let's say the first situation. So the first situation, I'm relating to the asset, the first category, which is the 3 months old. Remember, we purchased 70 units of our 3 month old lamb. So on the date of purchase, right, it was 400, but we are not going to look at the date of purchase. We are looking at the date at the end of the year. So look at the price of 3 months old here. 3 months old, the price is 890, and now after 9 months it will grow to become 1 year old, right? So you are going to compare these two price, this price 890 with 1030. So I put 1030, the price at the end of the year, to be price 2. This is the one at the end of the year, end of the year. And price 1 here, this one is the price, this price, yeah, is actually the price as at the date of acquisition. So I'll use a different color. The date of acquisition. So that two different, uh, two different. So the price, the price not on the day of acquisition, the price on 31st of December, but for different age group. So at first, 31st of December, the 3 months old, and if you look at the physical change, 31st of December, it becomes 1030. So 1030 end of the year versus 1030 also end of the year, but for 3 months. So this is the price for 3 months. This one. This is the price for the 3 months. This is the price for the 1 year old, because we are talking about physical transformation. So the price is still at the same date, only the age will be different. Then we proceed with our second one. So I put this here, 3 months. I'm taking the price here. Look at the arrow I pointed. And now we have the second category. So we are done with the 3 month. Yeah, our 3 month, which is our new acquisition. Yeah, I do that first. And now we are looking at what our amount that we have in our account, or the remaining sheep that you have before you start the current year. So 1 year old sheep, if it's at the beginning of the year, it is 1 year old. So now you need to look at the price as at 31st of December. 1 year old sheep, which is this one, right? versus 2-year-old ship, because in the physical changes would be from 1 year to become 2 years old, but at the same date. So 1 year old, 1030, yeah. And as at the end of the year as well, for price of the 2 years old is 1280. So therefore, if you take this, the difference between the two prices, and you multiply with 100, you'll get 25,000. The same case for the first one. The difference between the two prices, which is the price as at 31st of December 2016 for different age group compared with uh, each other, then you have to multiply with 70. You have 9,800. So that is for the second age group that has now grown up from 1 year to 2 years old. Now we go to the third one. The third one is the one that is from 2 years, just now 3 months to 1 year. The second one is 1 year to 2 years. The third one is 2 years to 3 years. So for the 2 years old to 3 years old, you are going to look at the price at the end of the year again. 2 years old, 1280, this one. And when it for the changes in physical characteristic, 2 years old will grow to become 3 years old. So the price is 1520. So the difference between these two prices will now be multiplied with the number of sheep that you have, which is the 2 years old sheep, and that refers to the 50 units. So this 50 is the one given in the question, right? The 2-year-old sheep now becomes 3-year-old. So 50 units. The next one is the last one. The 3-year-old sheep, right? 3-year-old sheep. Oh, here this one should be 150. Sorry, this one is not 50. This one is 150. I apologize for that mistake, because I checked the question just now. The 2-year-old is not 50, 150. Go and check the question. Let me just show you. Wait, yeah, this takes some time, because the information is in the question. Just want you to see. 8. Okay, this one is the 2-year-old sheep that I mentioned earlier. All right. Okay, so I go and make correction to that. Just bear with me. I'm sorry for the delay. Let's look at our next part, which is on the third one. Yeah, so this is 150 times with the difference between the two prices. Now we look at the 3-year-old sheep. 3-year-old sheep, if it's at the beginning of the year, was 3-year-old. At the end of the year, it becomes 4 years old, because we are talking about physical change. So therefore, look at the price here. The price 1520, 1520. 1520. I'm using a different color. So 1520 versus 2000. So the price date is the same price, the same date, sorry, but you are taking the different characteristic. The different characteristic here is the 3 years old versus 4 years old, different age. So take the difference between the two prices and multiply with the units. That will give you the fair value due to physical change. Remember, physical change is different age group or different physical characteristic, but at the same date. We are looking at the transformation of the physical characteristic at the same date. What is the difference in the fair value? So if that has been done, you will now get a total fair value coming from physical change of 94,800. That is for first part, due to physical change. Now we move on to look at the fair value due to price change. When we talk about fair value due to price change, we are looking at the different price, but with the same physical characteristic. Okay, meaning that the due to price change is that there will be price at different date, but the physical characteristic will still be at the same age. So different date, but the same age. So different date here that you have is, let's say, to compare the price of a 1-year-old ship on 1st of January, different date, and the same characteristic 1-year-old on 31st of December, where the price is 1030 at the end of the year, and as at 1st of January it was 900. That was for the price changes, right? So that was the first one. However, if you notice that what I'm doing is I put the age group according to the youngest to the oldest, right? So if you look at what you have here, on 1st of April 2016, you have a new acquisition, and that new acquisition was 400. So that 400 is on 1st of April. You cannot compare with 1st of January. So that 1st of April, which the age here is for 3 months, right? So the physical characteristic does not change, same age. So what you will do is you will compare with the 3-month-old ship that is as at 31st of December. So if you do that, you would see that the 3-month-old ship here is 890 versus 400, this one, versus the price here. So here 890 minus 400 times 70. 70 is the number of the 3-month-old ship. So you get 34,300. That is the first one. The second one is to look at the existing ship that you have, looking at the same age, different date. So we have already pointed out earlier for the first one, 1-year-old. For the 1-year-old ship, yeah, as at 1st of January, different date, beginning of the year, 900. At the end of the year, the price for the same ship, similar age, was 1030. So the price 2 versus 900, the price as at, this is the price as at 1st of January 16. But this is the price, the one here is as at 31st of December 16. So we are comparing the price of different price on different date, but at the same age group. Next, we go on to look at 2 years old. So the 2-year-old is this one. 1st of January, the price is 1,100. However, the 2-year-old ship, the similar age, as at 31st of December, the price is 1,280. So you will take the difference between the two prices. Yeah, the price as at 1st of January 16 versus the price at also 31st of December 16. Price 2 is at set 31st of December. Price 1 will either be beginning of the year or on the date of acquisition. Next, you will do for the 3-year-old ship. You have 50 of them on 1st of January, that 3-year-old ship. You want to see now what is the price changes, the gain on the price changes. So you will compare the 3-year-old ship that you have on 1st of January with the 3-year-old ship that you have as at the end of the year, that is within the same age group but different price. So those two different price is 1520 versus 1350. So the difference will be multiplied with 50. You have 8,500. So the total from this 1, 2, 3, 4 will be the total gain or loss from your fair value change due to price change. So the total is 82,800. So now you have already calculated two fair value changes coming from price and coming from physical changes. And that total will be 177,600, which is the total fair value gain. Now let's put this here in one page. So these are the figure that we have calculated earlier due to the physical change. Remember, physical change is looking at the different age group but at the same date. Same date mean end of the year. Different age group mean looking at the growth. Yeah, from what you have as at the end of the year. What are the price if you have change in physical characteristic on that particular age group, yeah, and the changes to that age group as at the end of the year. So that have been calculated earlier. So you have 94,800. And the second one is the one due to price, where we're talking about same age 3 months, the one that you purchased, 1 year old, the one that were in the existing balance. This one is as at first of this one is as at 1st of April. The price that you have here and here, but the price that you have here are all on 31st of December. So we are talking about same age, different date. Look at this, the different date, but look at the same age. The age 3 months old, 1 year old, and 2 years old, and 3 years old respectively. So the total would be 177,600. That is a fair value gain. And that fair value gain will need to be journalized. If you do journal entry, you will debit the biological asset. This is not gain on initial recognition because you have no newborn sheep, newborn cow, whatsoever. You just have things that you purchase, right? You imported the 3-month-old lamb. It's not that it was being the birth, the so-called cow give birth to another calf. No such thing here. So therefore, there is no such thing as gain on initial recognition. But this is gain on fair value changes. So 177,600, which come from this two total. So that is the one that you will show as your revenue or your income, yeah, in your SOPL. So you are asked to calculate the carrying value of the sheep as at 31st of December. So calculate the carrying value as at 31st of December, meaning that they want you to calculate what are the balance carried down in your biological asset on this date. So if that is the case, you need to find out what are the age as at 31st of December, what will be the age, and what are the price also as at 31st of December. So let's see. The 3-month-old that you purchased on 1st of April will now be 1 year old, right? Because this is after 9 months. After 9 months, that 3 months will become 1 year old. So you will take that price 1030, the price of a 1 year old on 31st of December. 1 year old 31st of December, the price is 1030. You can check that in your question. I've already taken the price and put it here. The price of 1 year old 31st of December. The date won't change because you asked to show it on 31st of December. Next is the 2-year-old. This one is after 1 year. After 1 year, the 1-year-old sheep, which is 1-year-old sheep, yeah, will they have 100 of them. You have 100 of them will now be 2 years old. So take that 100, multiply with the price of 2 years old, because at the end of the year, the age will grow, right? They are no longer 1 year old. They will be 2 years old after a year. And the price of 2-year-old as at the end of the year was 1280. Next is the 3 years old. So after a year, if you look at your table, before that you have 152 years old on 1st of January. 152 years old sheep. But if you talk about 31st of December, that 2 years old will grow to become or transform to become 3 years old, but without anyone dying, right? So 150 units are still there. And you need to multiply with the price at the end of the year for the 3-year-old, because they are from 2, they grow to become 3. Next is going to be the last one. By the beginning of the year, you have 53-year-old cow, but after 1 year, that 3-year-old cow will become 4 years old cow. And the price of the 4 years old cow as at 31st of December 2016 is 2,000. So that 2,000 multiplied by 50. And this one will give you the total later will be 5 to 8 100. And this is the fair value less cost to sell. And this is the one that will be shown in the soft P as what? It will be shown as the biological asset. That is the one that you will show in the soft P. So this is the simple way of doing that. So you need to find what are the carrying value, and this is the carrying value at fair value less cost to sell. Fair value less cost to sell, and this is at the fair value on 31st of December. You are asked to also do this statement of profit or loss. So the fair value change is actually your revenue, right, or your other income, depending on what are your principal business activities. Yeah, if you are talking about the main activities are agriculture, you will put that under revenue. But if you have several other activities, which are your principal activities, 3 or 4, maybe that should be put under other income. But that is your part of your income. So the expenses here is, in this case, subsequent expenditure are being expense off. So the total would be the total here, right? 177,600. 177,600. 600. That one is the total for the fair value change, and that is the total for the fair value change. If you are asked to prepare SOPL, this one will have to be deducted. And if you talk about the income from sheep farming, that one would be 177,600 minus 44,000. Okay, this is not the figure. You need to go and work out what is this figure yourself. Right. Okay, before that, I want to show you what I promised earlier, which is showing the biological asset account, because I want you to be able to understand also how do we record that in a journal as well as in ledger. Here you come. So this is the one at fair value less cost to sell, and you can either do it this way. This is done from, for example, the workings that we just completed just now, the carrying amount, or you can also use your T account. So this one 322,500 is the balance from the 3 different age group at the beginning of the year. 28,000 is the one from the acquisition of the 3-month-old. This one is 1 year old, 2 year old, and 3 years old at the price on 1st of January 2016. This one is the 3-month-old sheep at the price 1st of April. And this fair value change is from our calculation that we did for our physical worth and our price change. So you can either do this way by totaling what you have in the debit and credit, or you can also do the workings by way of just doing the carrying amount. However, if you are asked to prepare a biological asset account, you must show all these entry. What are the acquisition, what are the beginning balance, and what are the fair value changes. But in this question, you are asked to just show the carrying amount. This is not necessary, this biological asset account. But if you are asked to show the biological asset account, the column ledger, you need to do this. That's it. I'll thank you for your time. We will see you again in the next video. I hope you keep on learning, keep on watching until you understand. Pause, stop, continue, and do as you please, as long as that makes you learn. Assalamualaikum warahmatullahi wabarakatuh.